Hello everybody, this is Toni Turner and welcome to the market now as of the market's close on Friday, June the 7th. Wall Street's main indexes rose about 1% today as a sharp slowdown in U.S. job growth raised hopes of Federal Reserve interest rate cuts, and Washington's decision to delay tariffs on Chinese goods added to an appetite for risk. The S&P 500 was on track for a 4.6% gain for the week, which would be its biggest for November. And on that note, let's go on to three charts that could give us some insight into the weeks to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. As you all know, this is the exchange-traded fund that closely follows our S&P 500 index. Now today, the SPY closed at $287.87. That was just above the 50-day moving average, the green line, which came in today at $286.71. So good news, the SPY is back up above. It's up above its 20-day moving average, the red line coming at 282. The black line, the 200-day moving average, the longer-term moving average coming in at $227 and change. So we're back up above that 50-day line. Now we're heading up to this resistance here, just barely under 290. So that's a good thing. Of course, the SPY is still above its all-time closing high, which came in on April 19th. At 100, and it was either that candle or that candle. I think it was this one, the all-time closing high of April 30th, which touched $294.02, and that was $29.45 on the S&P 500 itself. Now this week, as you may see, the S&P on Monday, or the SPY, fell to an intraday low of $273, or about $27.30 on the S&P 500. Then it rallied the remainder of this week, coming back up to its prior resistance. Now, one pattern I did notice here is a very shallow, if I can draw a straight line here, but it's going to have to be tilted up a little bit, a very shallow head and shoulders pattern the SPY drew here, if I can keep this straight, and it did break below this support line at about 278, 280. It did fall below that last week, not this week, but the week before. But then it managed to rally back up and moved back up into the resistance that had probably knocked it down in the first place. So this is a positive signal that it hasn't stopped, at least it hasn't stopped yet, and fallen back down. This could be called a throwback rally here so far, but we'll have to see if the SPY in the coming week, and of course a lot will have to do with the tariffs news and so forth, but if it can move back up through the prior resistance of this head and shoulders, then we can call this more of a continuation pattern, but it was a kind of a nail biter the week before. Okay. We do have resistance coming in here again at 289, 290. We do have support down here at this 273 line, or 2730 on the S&P 500. So now once again we're back at the let's wait and see line here. If the S&P or the SPY can climb above 287, 290, maybe continue back up onto its 294 all-time highs. Or if it can't stop, if it has to stop at 290, at least we have support down here at about 282, and we'll see if it can stay above that line, maybe into more into the month of June. So nothing we can do here but wait and see whether this tiny little short-term uptrend can continue here or not. So we'll watch that, of course, into the coming week. Now, as you all know, in Tony's Market Club, we watch the IWM, the iShares Russell 2000 ETF, because it tends to be, and this is a small cap index, the Russell 2000, companies valued at $300 million to $2 billion, because small caps can tend to act as a leading indicator for the market. Now, so far, if we just took what's been going on with the IWM at face value, we'd have to say, well, the IWM is not suggesting the brightest future here, but it's holding up. As we mentioned before, and you already know, it rebounded from that downtrend and making a bottom at December 24th. It did rebound and move back higher up to prior resistance, but it did not come back up to its all-time highs, previous all-time highs, like the NASDAQ did and like the S&P and the Dow did as well. So it's still it's noodling around here, figuring out what it wants to do. Now the IWM here closed below today, but it's still below its 50-day moving average at 154. Its 200-day moving average at 153. It closed here today at $150.80. Now, if it can climb back up, it will be a little bit reassuring here. If it can climb back up and move back above its 200-day moving average and its 50-day moving average, 50 days coming in here at $154.48. So if it could get back up over 155 and stay there, that would be a positive note for the market, a positive kind of suggestion for the market. If it cannot, though, if it stays here at 150.80 is where it closed today, if it remains below those moving averages, then I would tend to get more defensive in my position, especially if it moves down below support here at, call it 145. If it moves down below that in the coming week, then I am going to get more defensive in my outlook. So keep the IWM in mind, perhaps, maybe keep an eye on it and see if it can stay above, especially above 145, hopefully above 150, and see which way it can go, because it could again give us clues to where the broader market may head. Finally, today we're going to look at a chart that we haven't looked at in a long time. This is a daily chart of the Invesco Wilder Hill Clean Energy ETF, symbol PBW. The PBW has 38 holdings, and included in these holdings, the bigger picture is industrial, or a bigger sector picture is industrials, utilities, materials, consumer discretionary, and energy, of course. The top components, and this is an international ETF, the top components are Enphase Energy, SunPower, Solar Edge, Jinko Solar, and First Solar. I'm sure you're familiar with some of these names. Now, we can see here that back in December of 2018, it did fall to a low of $20.08. Then it climbed dramatically, made a very, very big V-shaped recovery and higher, climbed dramatically to its May 3rd close up here. It climbed back up to over $28 back here in February, then has kind of moved sideways here, and then made a high here on May 3rd. That closed then at $28.88. So since that close, it's kind of moved back down here. You see this lower supporter, excuse me, trend line that I'm drawing. It hasn't moved above these highs yet at 28.80. So we have kind of a sideways horizontal move going on here. The RSI is down at 54.55. It is not overbought. The MACD is down below its zero line. It would be. It's trying to come back up over that zero line now that the PBW is back above its 50-day moving average. Now it closed today at 28.20. I'm going to watch it into the coming week. If energy can gain a little bit of steam here and the PBW can climb back over 2030, which was back over its highs for today, I may add shares of the PBW to my portfolio and see if it can break out from there. My initial stop will be down here. It's a tight stop at 26.80, just below this pivot low, which comes in right here. So actually the stop will be more up like right about there. I don't want to particularly take any chances and get stopped out with so if it starts down dramatically, 2680 will be about where I'm going to put my initial stop, and then of course raise it if PBW can get back up to 2888, this prior high, and then climb higher from there. Now this is a relatively conservative play, I realize that, and since the market is it's done well this week for sure, but it's still not it's not proven yet that it can stay in this big uptrend that it had been in. So I like conservative plays when the market is in an environment such as we find ourselves right now, kind of up one day down the next, or up 1 week down the next. So you may want to keep an eye on the PBW in the coming week, see if it can continue its little climb here, and perhaps even pop over these highs. If not, again, very conservative stop here at 2680. And now on to the next week's economic reports. But first, please join us this coming Monday, June 10th, for our next session of Toni's Market Club. If you are not sure how you can make money in the market right now, let us help. During our session, we talk about which side of the market to trade. I give you a mini trading lesson, and I also give you stocks and ETFs that may become ripe for high potential trades. Can't attend the live session? Not a problem. The recording is available to all of our members just a few minutes after the session ends. Toni's Market Club is a low-priced, high-value opportunity to learn more about the market, trade more successfully, and make more money. So please join us. For more information, go to the link on this screen or click on the button below. And now on to this week's economic reports. On Tuesday, we will have the Producer Price Index. Wednesday, we'll have the Consumer Price Index and our usual crude inventories. Thursday, we'll have our usual weekly jobless claims and natural gas inventories. On Friday, we'll have retail sales and the University of Michigan's Consumer Sentiment Report. Again, join us for Toni's Market Club this coming Monday. Don't miss out on this terrific opportunity to raise your trading skills and your trading profits. Until next week, keep green on your screen. I'm Toni Turner, and this is the Market